and welcome to our week ahead. And a quick recap on what's been going on over the last week. And we saw pretty whipsaw-like action in global equity markets, bond markets, and in foreign exchange led by the dollar. That's after Jay Powell's remarks midweek, followed by the non-farm payrolls report on Friday. So just to recap, Jay Powell said that the Fed may look to slow the pace of rate hikes as early as its December meeting, and that's coming up a week after this one. That was taken as a sign that the Fed is going to slow down. That's the pivot narrative. Markets liked it. The S&P was up 3% on the day to close out November on a decent, strong, bouncy kind of note. The implication that the market heard was that the Fed is slowing down. Now, that was somewhat deaf to the other noises that he was making, which is we've still got a long way to go. And I think this comes back to that comment from Fed Governor Waller, who pointed out that quit worrying about the pace and the timing. It's the destination that counts, and it's where the Fed is going to get to. And so come Friday, we had that bumper non-farm payrolls report, 263,000 jobs added, but wage growth up 0.6 versus 0.3. That was key, and that points to wages continuing to rise and potential wage price spiral. Anyway, it all suggests stickier inflation, and it suggests the Fed is going to have to keep on hiking rates. It may well slow the pace. 75 basis points every meeting is pretty aggressive. It doesn't need necessarily to go at that kind of pace, but what it can do is keep on going for longer. And I think we're going to see it have to go beyond that 5% level. James Bullard in that camp where he says it could be anything from 5 to 7%. And I think next year, as we detail in our 2023 watch list, which is coming out in the next few days, very much the case that the Fed is going to be hiking for longer than it or markets currently expect, because inflation is not transitory. We have a new paradigm, a new inflationary paradigm, and that changes all the equations that you're used to dealing with. So coming up this week, we have the first of a big fortnight really for global central banks. The RBA and the Bank of Canada are in action this week. That's ahead of the Fed, Bank of England and ECB the week after. So lots happening. We'll look to see whether the RBA or the Bank of Canada want to slow or increase the pace of tightening. They've been tightening quite aggressively this year, just like others, just like the Fed, and we will see what their sort of views are. But I think the impression is maybe even if they're not quite going at breakneck speed, they are seeing signs that inflation ain't going away. Elsewhere, we have US ISM services, PMI, that'll be one to watch. And also Thursday, Christine Lagarde speaking in the morning. That's going to be pivotal ahead of that ECB meeting. We'll need to see what she has to say about the pace of tightening by the European Central Bank. So that's all what's driving markets next week. We've also got some earnings. DocuSign, a great pandemic winner that's somewhat or greatly come off the boil since. Also GameStop, we'll be looking at that one, as that was that meme stock retail trading favourite from, it seems a long time ago now. But that's it. That's what's coming up this week. As I say, our watch list for 2023 will be out soon, so do check your inbox for that one. Thanks for watching.